Hello everyone, welcome back to Upside Down Data. Today I want to introduce our new risk indicator for the Sandbox and its native token SAND. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So first I want to thank everyone who voted in our polls both on Twitter and on YouTube. We put out some polls asking which asset you would like us to make a UDPI for next, and the Sandbox was the winner across both platforms, to a smaller degree on YouTube, but by a decent margin on Twitter. The Sandbox SAND was the asset you wanted to see, so here it is, the UDPI for SAND. So if you're returning to the channel, you're familiar with our upside downside potential indicator, but in brief, what this indicator does is it assesses risk of the asset. Is the asset high risk, high being when the upside potential is quite low, downside potential is quite high, or is the asset low risk, when the downside potential is quite low, upside potential is quite high? So the UDPI goes from -5 to 5. What I'm showing you here is SAND's price history throughout time with price on a logarithmic scale. Each dot is a day, and each day is color-coded based on the output of the UDPI. So again, high risk points, low risk points. And you can see that the UDPI does do a good job of identifying these high and low risk points in SAND's history, these points where accumulation has been advantageous and where distribution has also been advantageous. So if you're following the channel, you're familiar with that we have different versions of the UDPI. We have versions that look at different time frames. I'm showing you here the long-term UDPI, which cares about moves that play out for over multiple months to years kind of move. These big macro sweeping moves from these really low macro bottoms to these sweeping all the way up to these big macro tops. That's what the long-term indicator cares more about. Cares less about this kind of intermediate volatility that happens in the interim. But we also have different versions, so I want to show you those as well for SAND. So just showing you long-term. We also have a medium-term UDPI that cares about moves that play out over weeks to months. So a little bit of a shorter time horizon that it cares about. And so it's basically just going to care a little bit more about some of this volatility that happens in the meantime. And then the short-term UDPI that cares about moves that play out over days to weeks. And this indicator will care the most of any of them about this kind of intra-cycle volatility, this volatility that happens in the middle of these bigger macro moves that we end up seeing. And I think we can see this a bit clearer if we look at the raw output of the model across time. So I'm replacing the y-axis here with UDPI, and this is just the UDPI level across time. And what you can see is that over time, the long term, it's just these bigger sweeping moves that it seems to be caring about, whereas the medium term cares a little bit more about some of the volatility it's seeing in the meantime, and the short term cares quite a bit more about that intermediate kind of, or that shorter term volatility that it's seeing. And I think some interesting things can be observed in the more recent past, right? So one of the interesting things with SAND relative to some of the other assets is when the big pump came, or when some of the big pumps came. You know, I had these moves out of July. We can see that across all the time frames. The summer was identified as this really low risk point, but then that was just kind of half the move. We saw this huge explosion more recently, you know, in October, November kind of general area, as you know, the big metaverse narrative took off. You know, when Facebook changed its name, or the parent company's name, to Meta, that really spurred this huge interest in the metaverse space. Sandbox was set up well to kind of capitalize on all of that hype, on that narrative. It really exploded during that time, and so that's really where things spiked up, where it actually recorded its highest levels of risk across all the different time frames. Well, we can see that since then, things have cooled off across all of the different time frames. We've actually fallen quite precipitously across all of them, with the short-term UDPI having gotten down to almost -3 before bouncing back up a little bit in the more recent days. Now, one of the things that's interesting about this behavior, if you've seen some of the videos that Joe has put out recently, he's made this observation as well. The fact that when you see the short-term, or excuse me, when you see the short-term UDPI kind of getting out in front of the medium-term UDPI, so essentially when the risk is plummeting faster in the short term than the medium term, and then you see a reversal off that point, oftentimes that does denote a bottom. Oftentimes when you get that really extreme violent move to the downside, where the short-term risk is really plummeting even faster than the medium term, oftentimes that ends up being these kind of reversal points, that the market has extended too far to the downside too quickly, and oftentimes upside can follow. Now, nothing's guaranteed. I'm not saying that's for sure going to happen or anything like that. Obviously with the crypto markets right now, their fate is not really their own. Macro uncertainty has really been driving crypto prices down, hampering their ability to really appreciate. At least that's my read of what's been going on recently. So unless if we get a really bullish sentiment in the macro market, then certainly I think Sand could stand well in that kind of environment and might be able to resume its uptrend. But we'll have to wait and see. And obviously it's crypto, so anything could happen. Even if we did get macro positive sentiment, macro bullishness, doesn't guarantee that Sand will have to pump. But certainly it's in a much better position now to pump to the upside than it was just a few weeks and months ago, right? Sand is much more likely to put in a nice move to the upside from these risk levels than it was back here at kind of that local top that it put in, or its all-time high, that it put in here. So it'll be interesting to wait and see. And I do think, though, that if the broader market conditions get more bullish, I see no reason why Sand can't start appreciating again. Doesn't mean it has to go in and put new all-time highs in immediately or anything like that. But certainly I would be surprised if Sand were to continue to dump off of these points when the rest of the market pumps, right? I just don't see that as being likely. And so if we do see broader macro bullishness, I think that could do well for Sand, and it's kind of reset its risk to a point where more upside, I think, is quite realistic. And the model thinks it's realistic, right? Across all the time frames, it sees more upside than downside potential, which is bullish. So again, not financial advice. You should make your own opinions. That's just my read of this data. So to talk a bit more about where specifically we are right now with the actual raw numbers, we can see that the long-term UDPI is at negative 0.87, so slight bullish bias, but not extreme. So that basically is saying that in the coming months, there's, roughly equal realistic downside or upside potential. It can kind of go either way in the long term right now from the model's perspective. So plenty of room to move to the upside if that happens, but also room to the downside that we need to be aware of. The medium term is more bullish. It thinks that there's more realistic upside in the more medium term, so the coming kind of weeks to months, than there is downside, but still downside that's possible. And then the short term is where it's most bullish. So it thinks that Sand has chewed up quite a bit of its realistic downside potential. And then with this more recent bounce, it started to realize some of the short-term upside potential. And so it maybe if it's able to continue to do that, then I would be watching this short-term UDPI to see as it rises up. If it starts to get into these really overheated levels, that's when I'd expect more of a short-term stalling out point or potential pullback at that point. But certainly where we are right now is nothing to be, in my opinion, too concerned about in the short term. Now, that doesn't mean it has to keep rallying or it has to realize this short-term upside potential. It's just that it has a lot more room to move to the upside than it does to the downside in the short term from the model's perspective. That's how I'd interpret that data there. So I think my overall interpretation with Sand is that we're getting a risk reset across the board. And if broader market conditions get more bullish, I think Sand is much more likely to be able to pump, put an upside from here than it was from those all-time highs it was at a few months ago. That's kind of my reading now. And it'll be just interesting to watch and see what happens, how Sand might react to a more bullish turn in the market if we see that, or how it would react to a bearish turn if we see that, if it ends up having to realize some more of this downside potential before it can reverse back to the upside. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.